Hello there, this is John Cogan, the CEO of Proformative, the online community for corporate finance, accounting, treasury, and related professionals. First, I would like to welcome everyone to today's webinar, So Long to Spreadsheets and QuickBooks, a fond farewell. As companies grow, the increasing business complexity amplifies the risks associated with using spreadsheets and small company-focused accounting systems. Errors and inefficiencies can have a meaningful impact on company efficiency and shareholder value. Continuing developments in cloud and related technologies have changed the economics of upgrading to and unlocking the power of ERP, tax, BI, budgeting, forecasting, and other related financial applications that empower more efficient operations and more strategic decisions. This webinar will offer an overview of the drivers of upgrading your systems to add capability and automation to critical operations at growing companies. Also on tap will be practical advice for changing the spreadsheet culture at your company and defining the potential value proposition of adopting cloud or other more scalable applications, which can raise the IQ of your data and drive better decisions and more automation and scalability at your company. First off, this morning, I'd like to thank our event sponsors, Adaptive Planning, Avalara, and NetSuite. Everything we do at Proformative is free for our users, and it's through the generous support of companies like these that we are able to do that, whether it's an event like this or everything that we do online where we have no ads. It's all completely noise-free and brought to you by great companies like these. So great thanks to Adaptive Planning, Avalara, and NetSuite. A few items before we get started this morning. I would like to give a quick welcome to Proformative, to those of you who are new to our platform. Proformative is the largest and fastest growing online resource for finance, treasury, accounting, and related professionals. We're an ad-free, noise-free community of well over 500,000 CFOs, controllers, treasurers, and you name it. And what we do is help one another learn so that we can get work done. Online, it's an online community where folks ask questions, share knowledge, and it's all a very safe and collegial environment of peers. It's a wonderful resource, and all of it is completely free and noise-free. No ads, no self-promotion allowed. Check it out at Proformative.com if you haven't seen it already. A few notes on today's event. A link to today's presentation and a link to the video recording of this webinar will be sent out to all attendees within 24 hours of the event, and is already posted actually at Proformative.com/resources. So if you want to grab that and follow along either now or after the event, feel free to do so. It's already out there. Next up, there are folks online this morning who will be receiving CPE credits for participating. You will need to answer all 3 of the polling questions that we will be presenting today, but they are statistical in nature. So I would ask that anyone online please take the 15 or 20 seconds to answer these polling questions as they come up, and then if we have time, we'll revisit those and we'll see what everyone said with regard to these polling questions. So please take a moment and take those questions as they come during the event. Speaking of questions, we'd like to get your questions and have our speakers answer them. We've got great speakers on board today. I'll be introducing them shortly. And they're here also to answer your questions. Now, we'll go through 2 presentations today, 20 minutes plus or minus each. And then we will have some time, hopefully, for Q&A at the end. Please ask questions at any time via the questions box in your GoToWebinar control panel. Finally, when we are done with today's event, you will be presented with a short survey. It is 60 seconds, very quick and easy. In it, if you would like us to connect you with either of today's speakers or any of the sponsor companies, that's just the click of a mouse away. So please let us know if you'd like any help connecting, and we're happy to help broker that connection via email after the event. So please feel free to do that, and please do take that 1 minute to take our post-event survey. We appreciate it. Your feedback helps us get better every time. Thank you so much. We have a number of learning objectives today, and The short story is we want to help you understand how you can move from spreadsheets and early stage accounting systems and other early stage systems, which may be largely manual, into a more automated environment. There will be a lot of discussion of the cloud and other enabling technologies that can help you impact your company's shareholder value, the efficiency of your operations, etc. So that's what we are looking forward to. And to get us started on this path this morning, our first speaker is Tom Kelly, who's a Managing Director at T. Edward, Inc. As the Managing Director of T. Edward, Inc., Tom serves as a strategic partner and CFO/CIO for several unique companies, including Cardia Health Systems and OnPoint Medical Diagnostics, organizations that were created by commercializing software IP from leading healthcare institutions. Also, TriPrima, who offers computing infrastructure and storage as a service delivered in a private cloud computing configuration, as well as many others. Tom's insights have been gleaned from years of working with clients striving to build on-demand environments that leverage the cloud to ensure crisp and timely execution of a company's strategy. Tom has held senior management positions with large publicly held companies such as PepsiCo and Deluxe Corporation, as well as small cap and privately held entities. He is a CPA and has an MBA in finance. And Tom, thanks so much for joining us today, and please take us away.
Thank you, John. Appreciate it. So the question is this you out there, right? We have plenty of information. It's all over the place. It's in spreadsheets, QuickBooks, reports we get out of QuickBooks, emails, but it wasn't integrated, right? Everybody's coming to the meeting with their own separate piece of information, piece of paper, if you will, and trying to consolidate all this information is what I would argue is a very manual and tedious process that takes many hours, days, if you will. And then when you get it all done, you get it all put together, it's very difficult to vouch for the accuracy of it because everybody believes their information is correct and the other information that the person brings to the meeting is wrong. So we sit around the table and complain and point the fingers at who's right and who's wrong as opposed to focusing on what really matters for our businesses these days. So let's talk about this. You know, think about a never-ending applications journey, right? You started with QuickBooks, you added Excel for analytics, then you maybe added Act, Goldmine, or even Salesforce.com to get a little bit more laser focused on the CRM side of things. You may have built a homegrown website. You've upgraded QuickBooks, added more seats. When you look at this and you see the arrows continually going there, it's kind of a never-ending process to some degree because over time there's more money, more resources, and more integrations. It kind of keeps growing and it ends up in a situation that I would argue doesn't give you the type of information you need when you need it and in the format you need it, i.e. accuracy, as we mentioned before. So this was a survey that was taken by the Institute of Management Accountants, and our friend there who just kind of popped up is Mr. Pareto, the person who's attributed to the 80-20 rule, right? 80% of things, pretty much, is what the key thing is. So you may have 5 customers driving 80% of your profit and so on. And Mr. Pareto even boiled this down to tomato plants in Italy, and that'll be a whole other presentation, not here for Proformative. But when you look at the frustrations that were identified, integration being the biggest, business intelligence, replace siloed systems, if you look at that, that's a significant chunk of what's going on in most organizations. Obviously, other things are important too, consolidations, data warehouse, moving to the cloud and other. But for the most part, when you look at integration BI and replacing these siloed systems, it's kind of what I just mentioned. We've got these disparate systems. They're not necessarily connected. We try to integrate them. We put a BI tool in between them, spending lots and lots of money when there's probably a better solution or a better approach out there for most organizations. Another question was asked, where do you see your opportunities to improve? And hey, kind of no surprise here, right? Business intelligence, ease of use. That's another thing to talk about because there's a lot of things out there that we can all leverage, but when you get down to the ease of use and whether employees within your organization will understand things intuitively, get up the learning curve quickly, that's something to consider, and I would argue you want to make sure that you reduce the number of variables, right? So the less systems, the better. The less things you have to integrate, the better. The better your business intelligence is going to be, because you're going to have everybody, for lack of a better term, on that same sheet of paper. So let's talk about the cloud, okay? And what are the top 10 reasons to move to the cloud? Number one, accessing IT data. There's 150 plus leading technology applications out there. You can access this information when you do adopt a cloud anywhere, anytime, anyhow, and frankly almost on any device. So when you think about the nature of what's happening today, and we're becoming much more mobile as a society, imagine if you have your iPhone, your Android phone, your Galaxy tablet, your iPad, whatever it is, God forbid you still have a laptop, but you can pretty much get this information anywhere as long as you have a high-speed internet connection. The other thing to consider is, think about the data center, and if you do have on-premise applications, I would argue this, kind of back in the day of when we think about outsourcing and manufacturing, and folks are just appalled by the fact there's no way we can outsource manufacturing, and you come forward to today, and it's kind of a moot point. When you think about trying to maintain your on-premise installation, if you will, your own data center, that's really probably not most companies' jobs. Most companies' jobs are to get good products out there and services, and make sure you have happy customers so you can grow your business. So I would argue, you have these companies that provide cloud services. They're tier 4 level data centers. Their key focus is to keep things protected, keep things up and running, and that's all they do. And frankly, if these cloud providers don't do it, guess what? They're not going to be around very much any longer. Looking at cost-effective capabilities, and this is a personal experience of my own. I will tell you, I've done over, well, used to be 25. That number's increased now, but I have yet to come across an installation where we are taking organizations to the cloud where we do not get, at worst, break even. In most cases, it's a savings on an ROI basis. So that is something to consider. Talked about working remotely. Again, thinking about monitoring and responsiveness. This is what these folks do. They do it every day, all the time, 24/7, 365. That is their goal. That is their job. The infrastructure they put together are very scalable. When you think about Google Apps and the number of users they have on their servers and all, I'd be very hard-pressed to find a company out there that has the number in the millions of users that is supporting their own data center. So the scalability, again, somewhat of a myth. Break the software upgrade adventure, as I'm sure all of you have experienced, whether it's QuickBooks or something else. When you do an upgrade, it's a major task, very arduous, and 9 times out of 10 does not go smoothly. Or I should go back to my friend Mr. Pareto, about 80% of the time we run into issues. And there's some other items on here you can read when it's out there. But for the most part, moving to the cloud is something that organizations should consider, not just because it's cool, but because it is effective, it's efficient, and believe it or not, it'll really help drive your business and take the focus off of dealing with the data, and whether it's right or not, to actually reacting to the data, and I would argue in a proactive way, versus what we probably do most times in our business meetings. So think about beyond core financials, because my colleague here will be talking later about Avalara. There's more to this than just financials when you think about the cloud and the applications that are out there. And the idea behind this is there are things when you're looking at your business, the opportunity to cash, it's an integration so you can process bills faster with probably, I would argue, much better accuracy. Procure to pay integration, you don't really need the spreadsheets anymore. And frankly, when you think about the workflow engines that many of these cloud providers provide, it's amazing about how quickly and efficiently you can route, let's say, a travel and expense report. And when we talk about travel and expense on the next one, you can almost make it self-service. There's plenty of applications out there that work very well as you can view it as a data capturing vehicle, right? So whether you have a smartphone or a tablet, whatever, you literally can take a snapshot of an invoice, you can point and click, you can submit your expense report and not even have to, leave the cab to do it, if you will. Services to accounting. So when you think about this, the accurate project profitability, many companies out there who are doing services don't really have a good perspective on, are we really making money in this project or are we losing money? But even taking that a step further, if we did make money or lose money on the project, why? And if we made money, how do we do more of that? And if we lost money, how do we do less of that? And the key thing here, I would argue, is one view of the customer. So if you have one database, you have all the information on the database, you reduce the need to do this reconciliation, tying of data between disparate systems. You really have that 360 view of that customer, everything from, is the customer satisfied with the service you're providing, to, is this a profitable customer for us? The other thing you want to also focus on is ensure whatever application or applications you're going to move to, will they grow with your business? So I mentioned the Google example, millions of users on their servers, right? But as you look at some of these offerings, make sure you're asking yourself some questions. Does it support multiple, subsidiary capabilities and multiple chart of accounts? So, you can do consolidations, but as your business grows, you acquire organizations, you can fold them in and you won't miss a beat. Country-specific tax and accounting regulations, or a shout out to my Avalara colleague, the next thing, automated sales tax management. For those of you out there who deal with Nexus and sales tax and filing all the sales returns, I can tell you it is not a fun process, to say the least, and God forbid you get an audit, and we all love that, right? So there are many opportunities out there to leverage applications that'll combine quite nicely with some of these cloud applications, such that, again, think about it like a data capturing tool. You're still on that one sheet of paper, but you're still able to provide the the detail or the niche, if you will, that's required given your business need, if you will. Think about drill down. I mean, a lot of us, when we get the income statement, it says, we made $1 million in revenues. How does that break down? Some of these systems are incredible where you just point and click and you can drill all the way down to the invoice level if you want to. So a couple things about that for my friends out there in finance who have to constantly spoon feed other folks in the organization as to why their revenue was up or down. They can almost be a self-serve person, if you will, because most people this day and age can take a mouse and point and click. And to some extent, you might want to position it as a nice game, Dungeons and Dragons and drilling down. I don't know, but the capability is there; it's built in. And the other thing to consider as you do cross, geographies, you may be buying businesses overseas. Many of these applications provide multi-level, multi-language management, so that you don't have to worry about if you have manufacturing in China and your headquarters is here in the U.S. You can make sure that the folks interacting with the system in China are getting it in the language they need, versus the folks here in the U.S. getting it in English. Another thing to consider is think about the flexibility, right? Because as I mentioned, our businesses are changing dramatically day in and day out. You want to make sure it's easy to integrate, right? So the suppliers, to connect with your suppliers and channels. You can think about this as, think about the Tom Sawyer Huck Finn and painting the white fence. You can actually, surprisingly, put some of the workload out on your vendors and your customers and your relationships, your partners, believe it or not, through some of these systems. So they'll be interacting with your system, albeit, from a secure level standpoint, limited, to what they should see and what they shouldn't see. And they can actually be providing you with real-time information in terms of what they're doing. The other thing is, you're going to reduce time spent in the spreadsheets because you can have self-service analytics now where you really don't need to go in there and do an ad hoc analysis. The information can be resident within the system. I talked a little about workflows and approvals. Again, I can't stress this enough, but for those of you out there who have a PTO process, let's say, where you have a piece of paper, you print it out, you sign it, you bring it to HR, you bring it to your boss, the boss signs it. Hopefully he or she will bring it to HR at some point, and then they'll import that into the system or enter it into your payroll system, and then hopefully everybody knows you're going to be on vacation. All of that can be automated. Same thing with travel and expense routing, right? You submit your expense report, I get an email, I have to approve it, I look at it, I approve it, or I deny it. If I deny it, it comes back to the person, I change whatever they want. It's very, very efficient. So workflow, just in and of itself, in terms of a microcosm of what happens in business today, is pretty profound of what these systems can provide. One of the other things I will tell you, again, this is more my personal experience, so I'm going to speak to that. Customization of these products I find to be much easier than the experiences I've had with on-premise offerings. So for whatever that's worth, and I've done a lot of this, I'll tell you that customization, within reason, is much easier to do on the cloud side than it has been for me on the on-premise side. And then reduce the risk of quickly outgrowing, as I mentioned. These applications are very scalable these days. So if your business is starting with 2 people and you grow to 20,000, I argue we could still, measure the workload and manage the workload for you and your organization as you grow. And here's another thought. Obviously, in today's world, some businesses are shrinking. You pay for what you use. So technically speaking, every year you can re-up how many users you need, so you're not going to pay for more than you need, if you will. And so let's talk about the options, right? And this is kind of the wonderful magic quadrant graph. We have on-premise, and for accounting, what you usually find is it's an IT impact. They're managing it for you. The customer information is somewhat fragmented because we don't have systems connected. Processes are fragmented, hence the workflow processes I've alluded to technically don't exist in some of these applications. At least, I want to be careful about it. If you're a user within the system, it may. But the point I want to make is you can leverage almost the entire workforce with, maybe not full user licenses so that they can submit an expense report, whatever, in the cloud. And I would argue there's pretty much limited self-service. It's very difficult to go in, drill down, et cetera. You're writing a report, be it in Crystal or something else. It's not very, friendly, if you will, to the efficiency side of the equation. Many on-premise offerings out there, they provide you with a suite. And for those of you who have been exposed to some of these larger ones, I would argue it's a substantial IT impact. So you have many resources, not only from just maintaining the servers, but also those that can write reports in the system, et cetera. Usually is followed with a very, very large CapEx expenditure up front. Business processes can tend to be integrated. You do have an integrated customer, but there's always this ongoing maintenance, right? You're going to pay a fee. And then we do have the upgrade, and everything kind of comes to a halt, and we have to be up the system for, we say, 2 days, and it sometimes turned out to be 10. Now let's think about accounting in the cloud. In this case, IT resources are low. I mean, frankly, what we're looking at here is, maintaining a high-speed internet connection and make sure your equipment is adequate from, whatever type of browser you're using. CapEx is usually quite low. You pay as you go. But here again, if we're just looking at accounting, that customer is somewhat fragmented and the processes are fragmented. So we're not connecting the individual departments, finance to HR to operations to sales. But now let's talk about these cloud offerings that provide a suite. Again, low IT resource impact, low CapEx, but now the business processes are integrated and that customer view is integrated, like I alluded to earlier, 360-degree view of that customer. So here's a cartoon, and just to share this with you, 2 gentlemen looking at their processes, and one remarks to the other, last year we recognized that our processes were far too complex. So we put them into the cloud, let the clouds make your life easier. And okay, a little tongue-in-cheek here, folks, but I will say this. Most businesses I come across, and as John alluded to, I work with healthcare companies. I even have an organization that uses technology to feed pigs. I kid you not. I would tell you about 80% of what those businesses do is very much similar. They're going to pay bills. They're going to receive customer payments. They're going to pay their employees. They're going to generate financial statements. About 20% of what they do may be unique. I would even say that might even be less, frankly. So the point I want to make here is many of these offerings that do have the suite do provide you the 360 view of your business. My recommendation is try to look at your business and see if it can fit what you want to do with your business, and not get into the cycle of our business is unique and we have to have everything solved in a very specific way. Because I'll tell you again, 80% of what most businesses do, regardless of the industry, I would argue, is pretty much the same. And here's an interesting little known fact from the New York Times. More human beings today have access to a cell phone than the United Nations says has access to a clean toilet. And please don't take this the wrong way, but only in America can we actually combine all 3. So what does this mean? And this is kind of what I was getting at before. So we have this data everywhere, right? And what good is having data everywhere if you can't access it? You think about mobility. We've got the tablets and the smartphones there. Workforces these days tend to be distributed, and that could be across the U.S., across the world. There's outsourcing going on, and that's not just outsourcing from manufacturing. It could be accounting, it could be HR. It could be marketing. It could be sales. So outsourcing is something that organizations are looking at embracing. And there's contingent workers out there. So, we may hire certain folks. You think about 1-800-Flowers. They hire their workforce, big peaks in around Mother's Day, Christmas, Valentine's Day, etc. But how do you keep everybody connected when you need to know what's going on with your business? Well, think about the devices that are out there and the nature by which these cloud applications allow you to access that information. We talked a little bit about self-service. I don't want to belabor that again, but think about travel and expense and even purchase requests. Somebody wants to buy a pen, and it's amazing about how long it's going to take for that person to get that pen delivered to their desk. But very importantly, think about visibility from anywhere. So if you have dashboards, many of these offerings have these dashboards already built in, you can actually be getting real-time information in terms of what matters to you, kind of the adage of act locally, think locally, act locally, think globally, in that the key things that you need to focus on if you're in charge of accounts payable, you can have a dashboard that just focuses on that for you. But you're going to know that if you do those things well and you see your KPIs trending in the right direction, you'll know that if you're getting your piece done, that you're adding to the overall value of the organization. And so leveraging the cloud, I don't want to belabor this, but if you go out there and you Google anything about cloud ROI, there's probably hundreds of calculators out there you can choose. Don't recreate the wheel, but also I'd argue this. Think about not just the savings, but about the efficiency gains. So the comment I made about workflow and other things. So keep that in mind. It's not just about cost. It's also about the efficiency gains. So that's the hard dollar versus the soft dollar trade-off, if you will. So very quickly, I'm going to run through this, but there are a lot of myths out there about the cloud. I've taken the liberty from my friends at Discovery, Mythbusters, and we're going to, the truth about cloud computing. What are some of the myths out there that I think exist in people's minds? And this is one of the bigger ones, the uptime myth. What happens if your system's not accessible? What am I going to do? And 9 times out of 10, a reputable cloud provider will provide you with 995 guaranteed uptime. What does that mean? You'll be down for about 44 hours. And I want to put this in perspective. 44 hours, that doesn't mean you're going to be out for 44 hours straight. That 44 hours can happen over 365 days. Might be 30 minutes here, maybe it's 3 hours there. But the point I want to make is think about your own internal infrastructure. I would argue if you keep your own internal statistics, take a look at them and see how much you've been down and what your internal availability or guaranteed uptime is. I think you'll be quite surprised. I think you'll find that these cloud providers way outshine what we're able to do internally within our own businesses. Another thing is the data security myth. You think about the Michelin tire commercial, and for those of you who don't know it, the baby's in the tire, and if you're a parent, and God forbid, Michelin tires in your car, you're a horrible parent because you're going to, kill your children. So the point I want to make about this is, on a security side, from a technology perspective, this data is primarily secure. I'm not going to tell you that it can't be hacked, etc., but I would argue you could be hacked if somebody wanted to. What it really comes down to, in my mind, is the human interaction. And where the security tends to break down is when we're doing things like pasting Post-it notes with patient information if you're under HIPAA, or if you're sending credit card information via an email. That has nothing to do with the application, frankly. Most of these applications, credit card PCI compliance, they are top-notch. Probably better than you can do on your own. Another thing, and this is my personal experience, the difficult learning curve myth. What my experience has been is, this time chart on the right shows you a basic chart when things dramatically change. There's kind of this bellying out, chaos. People need to learn what's going on. I have found the learning curve with these cloud applications to be very, very quick because they're very intuitive in some regards. They're written with the internet in mind. So if you're out there buying things on eBay or Amazon, you'd be amazed at how quickly people can pick up on this stuff.
Tom, we've got about 2 minutes left here.
Yep, hurrying up here. So scalability myth. I don't want to belabor this again, but there are, if you think about the single house, that's kind of on-premise. We got one set of plumbing, et cetera, and then we have the multi-tenant shared for the cloud where everybody's using the same plumbing. Not a great example, but hopefully you get the idea. The real cost myth, again, I don't want to belabor this either, but go out there and Google an ROI calculator for the cloud and you'd be amazed at how many choices you have, and you probably are going to find one that's going to specifically fit your needs as a business to prove this out. And finally, the applications Hairball. Just graphically, this is one of my customers, but this is what their infrastructure looked like, and it's amazing about how many systems you see around there. And then we have the Excel hell in the middle, where we're trying to piece everything together through Excel. Trust me, this is a non-winning proposition for anybody who tries to embark on that. Strategically invest in technology. Again, old way, a lot up front. The new way via the cloud, pay as you go, pay for what you need. Don't pay more than you need, and pay for what you use. The other quick thing is integrate your processes, right? So everything from your ERP to your planning process, integration is the key, but integration is the key such that you're not having disparate databases and different information to do comparables on. So the cloud enables finance to what? I would say think like NASA. Gives you the real-time information, any place, anytime, anywhere. It has definitely more tightly integrated analytics, and you can reallocate that IT budget from maintenance to controller of the user experience, if you will. So moving away from spreadsheets, QuickBooks to the cloud mitigates risks. Your data is secure, one version of the truth. Got formula, got link errors? I would argue you do. And from a compliance standpoint, yes, you can control access to your data. Obviously reduce costs, as we've talked about, but please, I implore you, think about the efficiency improvements that you're going to get as an organization. Some general tips for success: assign cross-functional teams, assign business benefits so you can measure them, broaden ERP usage across departments, ensure you'll have clear visibility into the ERP data, and plan for that distributed mobile workforce organization. Thank you, folks.
Okay, thanks for that, Tom. A lot to cover. Now remember, all of these slides are already available on Proformative for download, so you can, if you want to go back and catch anything that you might have missed there, you can do that very easily by going to performative.com/resources. Now we're going to go ahead and launch the first of what will be 3 polling questions. We'll do 1 now, we'll do 2 after the next section, and I'll leave these out for about 45 seconds. Now, as I'm doing that, I will remind you that you can ask questions at any time, and they will be addressed to the extent we have time during the Q&A session, which will come after the next presentation. Once again, if you're at this event and looking for CPE credits, you must take these polling questions, all 3 of them. If you are not here for CPE credit, we'd still love you to take the 15 seconds, take the polling question. It's interesting statistical data, and once again, if we have time, we'll turn this around and let us all look at how everyone's voted. So we're going to go ahead and close that down now. We're going to hop into the next section, and I'm going to introduce our second speaker today, Pat Fall, who is the Senior Vice President in Avalara. Pat is a 15-year veteran in the software and technology industry. He's one of the founding employees at Avalara. Pat has a deep foundation in both sales tax and internet security, and before Avalara, he was a founding employee of Imperva and an early employee at Checkpoint Software. And today he's going to give us a deeper dive into one segment of automation. Tom gave us sort of a broad overview of getting off of QuickBooks, scaling, et cetera. Well, sales tax, if you've ever been in finance or accounting in a business that deals with sales tax, is a major headache, something which all small and mid-sized companies start off doing manually. But there's a better way, and we're going to take a look at automation and technology in this particular area. Pat, please, take it away.
Thank you. Today we're going to focus on profitability and not risk, and the benefits of outsourcing tax compliance. As Tom had mentioned, using the cloud shouldn't be a scary thing anymore, and it does help businesses become profitable more quickly. We feel strongly that sales tax is a great tool that you can use to actually automate your compliance. And hey, there we go. So 6 reasons that we look to outsourcing. Number 1, obviously, it's scaling, which is a good segue again into losing that spreadsheet. If you want to scale your business, you can't focus on things that are unrelated to growth. Busy work, statutory requirements, general tasks are not going to help your business grow. Saving time, no more researching rates or building and maintaining tax tables is a huge advantage of outsourcing this. Increased accuracy. Most people today will either use a zip code or a basic address or even a state level sales tax rate and consider it good enough. If you never have to go through an audit, if you never have customers complain about it, then you're fine. But generally speaking, doing it the right way is the only way to do it. Mitigating risks, again, it's mitigating risks in an audit and with customers as well. We've seen people who've had their clients go through audits. They've been paying the wrong sales tax. It can lead to consumer use tax issues down the road and can cause a headache for everyone. It's just good customer service to do this correctly. Gain efficiency. We have many, many small businesses that we deal with that we see take their taxes where today it's 3 to 5 minutes per transaction. If they want to do it correctly, it might be 5 to 6 days, as much as 20 days of somebody's time each month filling and remitting tax returns. This is something that you can easily outsource and have someone do for you. And again, going back to scaling, you can't talk about that without talking about increased profitability. So small, medium businesses, large businesses that don't have 20-person tax departments. If you're a large business with a 20-person tax department and want to focus people on revenue-generating activities rather than collecting and remitting, again, focusing on billing, collections, revenue-generating is always more effective in terms of outsourcing. And those are the main reasons our clients generally do something like this, at least with us, and actually in general with outsourcing. And I'm just going to change screens. There's going to be a little lag. So the state of our states, and here's the real issue today. Sales tax equals state revenue. If you're buying things online from companies like Amazon.com, you'll see recently in the news that Amazon now collects sales tax in 7 states. Pretty soon they'll be collecting sales tax, most likely in the 45 states today that recognize and collect sales tax. And the reason that they're doing this is they're under great pressure from the states because most of the states are in budget deficits right now. And they're trying to increase revenue and not raise taxes. And so the only way that a state can actually increase revenue without raising taxes is to collect on taxes that are already in existence. And so every time a consumer or a business buys something online and does not pay sales tax with that, you are obligated to then go out and fill out a consumer's use tax report and a return, make sure that that gets filed promptly. The states have identified somewhere between $25 and $35 billion a year that's not currently being collected through state-to-state sales, online sales, catalog sales, things like that. Because of the way that remote nexus, or at its highest level, a physical presence within a state, clarifies that for, defines that for small businesses. And so what does this mean to businesses? Well, sales tax has now become a real source of risk. Whenever the states are in a revenue crisis, the first thing they do is they go hire a lot more auditors. And on Huffington a couple weeks ago, they had a great article about all of the states and all of the new auditors that states are hiring. It's hundreds and hundreds and hundreds of auditors to go out and start collecting this tax, which is due, but which hasn't been collected. If you get audited, it's no longer actually a matter of if you got audited, it's just a matter of when. And we're starting to see this more and more often. So the rules keep changing. There's about 11,000 tax jurisdictions in the U.S. today. So 45 states actually collect sales tax. Within those 45 states, there is 11,000 jurisdictions. I'm from Michigan. Michigan has 1 tax jurisdiction. It's always 6%. But Ohio, our neighboring state, actually has 89 tax jurisdictions. So depending on the state that you're in, Colorado, Louisiana, Alabama, Texas, New York, California, being some of the worst and most complicated places to be, you could have in one state hundreds and hundreds of tax jurisdictions. We had a report that was run by an independent group called the Neverending group, and it came back saying that about 95% of all companies underestimate today their sales tax liability. When you underestimate it, you carry a significant risk of audit exposure. The annual cost of being compliant without an audit for a typical company is around $24,000 a year. And that's just using general GAAP accounting measurements where you've got a portion of somebody's time generally dedicated to filing, remitting, calculating, making sure that it's all done correctly. If there's an audit involved, the annual cost doubles and goes to $48,000. So getting audits just isn't very fun for anyone. So Streamlined Sales Tax, what is this? This may be the first time many of you on the phone have heard of what we call Streamlined Sales Tax. It's a voluntary way of allowing all businesses to inexpensively calculate sales tax regardless of nexus. And that's a mouthful to say, but what it really means is that let's say that you've only got an office in 5 states right now, and you're not obligated to pay sales tax anywhere else. What Streamlined Sales Tax did was it said, look, we'd like you to voluntarily pay everywhere that you're shipping products to. And we know that you don't have to today, but if you voluntarily pay, there are 21 states and 3 associate member states that will cover the cost for you for hiring a third-party Streamlined Sales Tax certified company to do this for you. So if you're in 10 states and you're going through an audit, some of the benefits to you are you get audit defense, you get protection. Some states offer amnesty going back 3 to 5 years, depending on what you're doing, if you wanted to sign up for this. This program's been in place for about 5 years. There's been some positive and slightly negative things that have come, but mainly positive things for the businesses that have joined. Businesses that have never been required to pay sales tax actually now pay it because they believe now it's better customer service. Being in sales tax all the time, I often see customers or businesses saying, gosh, we don't want to charge sales tax because it puts us at a competitive disadvantage. But you have to remember, when you're not charging your client sales tax, they are then obligated to go pay consumer's use tax, whether they're using it for their business or their personal use. And so by not charging them for that or taking the burden on of calculating it yourself, you're shifting the burden to your clients. So although you may view it as a competitive disadvantage, by charging it, you're actually saving them work and possibly preventing them from going through a nasty audit later on. Remember, again, this is not a new tax. It's simply a tax that no one ever pays. And that Streamlined Sales Tax is the first initiative for that. You can see that the Streamlined Sales Tax states in here, green states are the full member states. You've got some associate member states, advisory states that currently aren't conforming. Obviously, there's 5 states today that don't pay any sales tax at all. And then project states where they're not advising it, but they're considering it. Colorado would be the only state that is non-participatory. What is this leading up to, though? The inevitable thing with Streamlined Sales Tax is that it's leading up to one of 2 things happening, and it's no longer a matter of if this is going to happen. It's simply a matter of when. Most people that are involved in this and have been following the legislation are already starting to see companies like Amazon having to pay sales tax and smaller companies having to pay sales tax. There are 2 bills out there right now. The first one is the Main Street Fairness Act. It is a non-voluntary bill. If this passes, every single business today that is over $5 million a year in sales and shipping things online is going to have to pay sales tax regardless of where they ship a product to, whether they've got Nexus or not. It's much more complicated than this, kind of doing a high level scenario of it, but basically they're saying that they're going to require legislation that charges for this. That's the Main Street Fairness, and sponsored by Dick Durbin. It's been around since August of 2011, and everybody believes that either this one or the Marketplace Fairness Act will pass before this time next year, most likely by summer, and there will probably be some grace period in there where it hasn't done it. Where the Main Street Fairness Act has been sponsored by Best Buy and Costco and Home Depot and really, really large big box stores, saying that internet retailers have an unfair advantage for not having to collect sales tax. They don't have to hire the infrastructure. They don't have to build it out. They don't have to use these products to do it. The Marketplace Fairness Act is actually sponsored by Amazon. And if you've seen the news, Amazon recently has dumped all of their vendors in Illinois, New York, and several other states because that was their way of avoiding paying sales tax, not having any connection to those states. But they've come back and said, look, it's really important for us to do business there. We want to have trading partners there. And so what we are willing to do is if anyone sells their goods or services through Amazon.com, we will charge them 2.9% of whatever they sell or whatever we collect, and then remit that to the states. But the fee to Amazon is going to be 2.9%. So Amazon has gone from avoiding sales tax, not wanting to do it, to now becoming a strong advocate of the collections, providing that they have the opportunity to actually become a tax collector for all the businesses that are using their service. This one's a little stricter. This is saying that businesses with anything be above $500,000. So what hasn't been decided yet are the thresholds for the businesses, what percentage of those thresholds is online and regular business, but you're probably, if I had to guess, expecting it somewhere to land somewhere between $400,000 and $1 million in terms of what your business would have to do on an annual basis. And if it's more than that, anywhere that you're shipping products to will be charged sales tax. And eventually it'll trickle down into smaller businesses. When we talk about the role of transactional taxes, you've got business on one side, government on the other side. It's pretty straightforward. On one side, you've got buyers and sellers. As a small business, maybe you're buying stuff to use internally. And again, maybe you're purchasing things from the internet. You're not paying sales tax on them when you're using them. We recently had a customer that we were speaking to that runs a coffee shop, and it's a local coffee shop. And they went through a sales tax audit. The auditor was in the back room on a break and noticed a giant stack of cups in the back room, and he noticed employees coming in drinking coffee, stacking the empty cups on top of one another, and just sat and counted the cups over a couple days of being in the office. Went back to the store owner and said, gosh, you know, you're pulling these cups out of inventory, and are you charging your employees for drinking the coffee? And they said, no, it's actually one of the benefits they get of working here. They do get free coffee. And went through and did a rough estimate on how many cups of coffee those employees had drunk over the last 3 years, and then went back, figured out what it would have cost, what the taxes should have been on it, and because they were pulling the cups out of inventory, because they were using them for their own internal use, gave them a consumer's use tax audit, using their coffee internally for their own internal use without collecting sales tax on it, and the small shop owner got a $12,000 fine for doing that. So they're serious about going after money. And again, on the other side, where people in the past looked at it as a competitive advantage not to charge tax, they're with all the use tax audits going on, they're looking at it the other way now. On the other side, you've got government, and excuse me, with government, you've got banks, jurisdictional authorities, you've got Uncle Sam, and they want to collect their taxes. So you're trying to run a business, you're trying to sell something or buy something, and on the other side, you've got banks and jurisdictional authorities trying to collect their pound of flesh. And in the middle of it, you've got what we like to call the black hole of compliance. And this means, the reason that we call it a black hole is because it's aggravation, distraction, risk, and cost to your business for trying to do this yourselves, which again goes back to rather than fall into the black hole, hiring a third-party company to do this for you. And so if you could outsource this, it's like hiring a super employee. Imagine hiring the perfect employee. They never sleep, they never take a vacation, they're always accurate, they have incredible tax expertise, and they allow the focus to be on growth for your business, not calculating sales tax. Done right, it's far less expensive to outsource this than it is to hire someone who's not a sales tax expert to do this, because either they're going to do it wrong or you're going to get someone who's really very good, but it's going to cost an absolute fortune to do this. So why do customers outsource? Well, what we find today is that most businesses out there really quickly outsource to payroll companies. They start up a small company, they outsource to a payroll company because payroll companies have been around for 40 years and everyone's used to doing that. With sales tax, I think a lot of businesses out there don't realize that there's a more automated approach to doing this, and it's very similar to payroll. I will say that being familiar with both payroll and sales tax on magnitude is harder to do than payroll, especially if you're in generally 4 or more states. Sales tax compliance adds no value to your business. It is error prone. And if you're looking at it, basically the steps that you'd have to take, you've got to do your address validation, you've got to configure your system to do auto jurisdiction on your own, product taxability, sourcing rules. On the compliance side, which would be the filing and the remittance, you've got liability worksheets that you're going to have to deal with. You're going to have exemptions, reconciliations, adjustments. That's not counting the fact that you've got clients that are exempt and all of the exemption certificates that you're going to have to collect that go along with it. It's all part of being compliant. And on the exemption certificate side, we often see companies, even very large companies, that have their exemption certificates being done with a cardboard box in a bad room, in the back room, rather than filing it accurately. So it is superior to doing things manually. If you look at this red jurisdictional outline on this screen, you're going to see an actual tax boundary, and this happens to be in the state of Colorado, in the city of Aurora. There are 8 overlapping tax boundaries in this one jurisdiction. I've only highlighted actually the one, but there's, in this case, you've got state, county, local county, city, local city, and then 3 special taxing jurisdictions that you're dealing with. When you're a small business owner and you look at something like this, 2/3 of this house is in a single tax zone, and the garage and the other third are in another one. How would you ever tax that if you were a business? Conversely, you've got this house on the other side of the street. Local politics plays a huge influence in determining tax boundaries. It makes no sense that the single home is in its own tax zone, other than the fact that the mayor's best friend's brother-in-law wanted to go to the same school as someone else's kids, and so they actually redrew the jurisdictional boundary line around that house. Or more likely, in the neighborhood, everyone wanted to vote one way for a certain candidate, except for a few houses, and what they actually would do is draw the jurisdictional boundary line around people that aren't their constituents. It's called gerrymandering. There are legal aspects to it, but people do it all the time, and it's why the jurisdictions aren't neat and grid-like. It's why they look the mess that they do. The other thing to be careful of, lat longe really is the only correct way to do this, where you can go, we call it geolocating, but when you're going to geolocate something right down to the center of a rooftop, you'll find that the accuracy for that will encompass all the different tax jurisdictions, everything else. Zip codes and sales tax have nothing at all to do with one another. They're completely separate things that were created. One is to deliver mail, the other one is to calculate tax and what jurisdiction you fall into. So if you're just using addresses, most likely you're not doing it right, or you're not doing it right a large percentage of the time. And then you've got things like oil fields, construction sites, where there might not be any address at all, and lat longe is the only way to actually be able to calculate correctly. Hey, John, could you switch over?
Time check. Here we've got about probably a minute and change left.
Okay. All right. Well, we'll go through.
Before we need to move. So why don't we keep on hopping here?
Okay, doke. So first generation of tax products looked something like this. You had very simple rate products. They were delivered initially in really large books, and then CDs replaced the books. What we found is that the internet has replaced both of these very nicely. When you look at, and they were really simple tax products, second generation of tax products really focused on the enterprise. They've been available for 20 to 30 years. Their costs could range from $35,000 to well over $1 million. Installation costs could easily exceed twice that. It wasn't really meant for small, medium, or even most large businesses, so that's why people had to hire people to do it internally. When we talk about the value of both combining a service and a technology, which is really what cloud computing is all about, you've got the best of both worlds. It's like building a swimming pool in your backyard. You could build your swimming pool manually if you want, and take a hands-on approach to manual calculation. You're going to wind up looking like the guy in the picture. He started building a pool when he was 7 years old. It's still not done yet. You could use a tool like a rate product, which is, again, the equivalent of using a shovel, and then your pool looks something like this. You may have the foundation dug, you may have some stones laid, but you're going to have a tree growing in the middle of your pool. Outsourcing and using a cloud technology to do this is more like you would never ever consider building a pool in your backyard on your own, and I always try to put this in terms of things people can relate to, because software or services don't often relate to that. But you'd never build your own pool. What you would do, though, is you would go out, you would hire a team of professionals to come in, they would pull the permits, they would spec the pool, they would help you design it, they would pick the materials that go into it to make sure that you're getting the right things. And then when it was all built, they would fill it with water, they would balance the pH, they would keep it clean for you, and all you had to do was swim. That is the equivalent of outsourcing tax compliance. The only thing that you've got to do is run your business. The only thing you have to do is swim. And so what to look for in an outsourced solution? Solutions and services that are priced less than manual calculations. There are solutions out there that could be $250,000. If you can hire 1 or 2 good people to do it for less and they do a really great job, it might be better. But most of the really good solutions today, especially the cloud solutions, will be able to do it for actually far less than even a single employee who's not a tax expert. Integrations that are not one-offs, make sure that the product is made for you, that they've got something that connects into it. Make sure that it's easy to use so that a business doesn't require a whole team of tax people to run it after it's been installed. Stable solutions from well-established companies with high credibility, very important to look for when you're dealing with products in this space. And success stories, people in your industry using the products in a similar way. Make sure you talk to your peers, your counterparts about their experience using any of these solutions if they've done it. So that's it for me. I just wanted to say thank you very much for attending.
Great. Thanks, Pat. And with that, I'm going to go ahead and hop into the next polling questions. We're launching the second one right now. We'll do the third one in just a moment. So the biggest frustration at my company related to current accounting and financial systems is, and this is once again getting to scalability issues, manual nature, et cetera. So please go ahead and take this. And once again, even if you're not here for CPE credit, we would appreciate your taking just a moment and answering this poll question. And then we'll leave this out for another 10 seconds or so since we're getting short on time. And then we'll flip to the last one. So 5 more seconds. Please get your vote in. I know that's going to be a more familiar refrain over the next few weeks here. I'm going to go ahead and close that, and we will get to the final poll question. Here I'll take a moment to remind you that when we complete today's event, you will be presented with a very brief survey. In that, we ask for your feedback. We always like to know what we can do better the next time. Please let us have it along the angles that we ask in that survey. Also, we make it very easy for you to request a connection with either of today's speakers or with any of the sponsors of today's event. That's just a mouse click, and we're happy to help with those introductions. With that, we'll leave this poll open for another 5 seconds, and then we're going to hit a couple, well, actually, we might just have time for 1 or 2 very quick questions, and then we will call it a day. I'm going to go ahead and close this polling question. We'll hop into the Q&A. So very quickly, I'll actually have both gentlemen respond to this, about 30 seconds or less, if you would. Security in the cloud. Obviously, when you're collecting data for massive numbers of companies and housing it under, virtually one roof. When you have these big cloud providers, that seems like a big fat target. For hackers, what has the real-world experience been, Tom, in terms of data security for corporate data in the cloud?
Well, first I would tell you, the world watches, right? So whenever there's a breach, you hear about it. Probably the one that I recall most is there it Googled, or apparently was an engineer that had gone in and looked at some emails. So I don't want to tell you that certain things can happen, but what I will tell you is that these companies are on it and they will report it and they will own up to it. So again, I just want to be clear here. Not like nothing will ever happen, but at the end of the day, I would argue your own internal infrastructure is a heck of a lot more vulnerable than what you're going to experience with these cloud providers.
Great. And Pat, what sayeth you on this subject?
Yeah, number one, I would say that if you're going to do anything over the cloud, make sure that you're doing it with a credible company. No one would go to, John's Bank and Trust where it was a green, rusty van parked in the parking lot and deposit their money in the back of it. You'd go to a financial institution with a good name that you know. And cloud computing is not new. So anytime that you use an ATM card, it's sending a signal over the internet and pulling cloud data down to give you your money. So anyone who's actually got money in a bank today, pulling money with an ATM card or doing things like that, actually is doing a form of cloud computing. So it's pervasive and it's in every part of your life. It's just a matter of, who are you going to do it with and what trusted sources. But as Tom said, it's very safe. And when there is a breach, people are all over it.
Thanks, Pat, and thanks for dissuading people from using my bank and trust.
No problem.
Let's see. So we have a couple other questions that we haven't had the ability to get to. I'll work with the speakers to see if we can get those answered online for everyone on Proformative to see and share. I got a couple of quick items. I already mentioned the survey. If you have any questions at all about CPE credits, please contact Chris Brower. You can see her email address right there. Thanks again to our wonderful sponsors, Avalara, Adaptive Planning, and NetSuite. They allow us to do events like this and everything we do at Proformative at absolutely no cost to our users. And finally, thanks so much, Pat and Tom, for your time this morning. Great information, even though we had to pack a lot into 60 minutes. Thanks so much.
Thank you.
You're welcome. Thank you.
All right, with that, we'll let everyone go, and we hope to see you again either online at Proformative.com or at another one of our events. Take care. Have a great rest of the week, everyone. Cheers.